Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very decent day in the markets today, and hopefully you had a wonderful long Labor Day weekend. So in today's action, guys, what a wild ride it was. We started off the morning with a very big gap down open on the S&P and on the QQQs as well. At one point, both of these indexes were down over 1.5% before the bulls were able to put up a fight into the end of the afternoon. We did not lose our line in the sand levels, and we did not also lose the daily uptrends just yet. The QQQs protecting the lows of 2 Wednesdays ago, and the S&P largely doing the same thing, but it was a bit too close for comfort for many people out there. Great day for volatility though, and many trades, especially if you watch the top 5 options video that I posted yesterday, many trades were available on the table this morning. So hopefully you guys were able to find what you were looking for. Now, the reason for today's decline was for a couple reasons specifically. Number one, we have to talk about the Trump tariffs and what the courts of appeals ruled last Friday. Now, it's funny because last Friday, this news came out very early in the morning, but not many people were talking about it. Not too many people were paying much attention to it at all. No, last Friday, if you remember, a lot of the emphasis was on the news that Alibaba had developed a new AI chip, and most of the selling last Friday was concentrated really in your semiconductor industry. The rest of the market was doing quite fine. But today, the media really chose to run with this one, and it hit the markets fairly hard. So what Trump's tariffs loss in court means for shippers and the billions in trade duties collected by the US government. Of course, on the Friday session, the Court of Appeals ruled that the Trump tariffs are illegal because they did not pass through Congress. President Trump obviously using the emergency act to conduct his tariffs. And not only 3 months ago did the first court rule that they were illegal, they now brought up to the Court of Appeals. They also deemed them to be illegal, and now it will have to rest in the hands of the Supreme Court, something that we may only get a final decision on in roughly a month's worth of time. The headline was as follows, though. President Trump's trade war suffered a big setback, with many of his administration's tariffs ruled illegal by a federal appeals court last Friday, opening up the potential for billions of dollars in trade duties needing to be refunded to businesses and throwing into question trade deals struck by the White House with other nations. Now, I was listening to a lot of the media talk about this today, and nobody is quite sure how the government would actually proceed to reimburse these tariffs, nor if any of the trade deals that were made have to kind of be unwound or redone. So this will be an ongoing story. However, the tariffs will currently be maintained in place largely through October 14th, and at the same time, the administration will be raising this case towards the Supreme Court. So it'll be an ongoing thing that we have to look out for here. But it's surprising, right? You would kind of anticipate that since tariffs had such a negative impact on the markets and the uncertainty surrounding tariffs continue to have such a big impact on the markets, you would expect a piece of news like this to actually contribute to some green in the markets. But sadly, that was not the case. Additionally, today, we do have to deal with a bit of September seasonality. We've been raising this concern now for the past few weeks. You guys know the drill. August, September, October, some of the weakest months for the market, but September especially very weak for the markets. You can take a look here at the performance since 1945. I'll move myself over, down on average about 0.6% per month. That's a very large sample size, but even if you take some closer ones, such as the returns from 1996 to 2024, so about 30 years, you can clearly see September is notably the worst month of the year. And lastly, if you zoom in even more to only the last 10 years, you'll see the performance here over the past 10 years. The month of September, really not good, especially 2020 through 2023. Last year was actually green, but was curious to be seeing. It'll be curious to see what's going to happen with the tariffs over the course of this September. So you got the Trump news, you got the seasonality, you got people saying the market is overvalued, looking for some discounts, looking for some pullbacks. Phenomenal 3-4 month rally underway right now. All of those things combined lead to a little bit of a narrative sell-off. And of course, you guys don't get caught up in the narratives. You guys understand that in the event we do sell off for the month of September, we're just looking for some very casual monthly higher lows on the S&P and looking for some very casual monthly higher lows on the QQQs. Why? Well, because we just got corporate earnings. And even though the markets can move on short-term narratives and short-term sentiment, at the end of the day, the fundamentals will prevail. We just had very beautiful earnings. 80% of all companies reporting revenue beats in the S&P 500, and 80% of all companies reporting EPS beats as well. And most of those companies also reiterated or raised their end-of-year guidance. So under the hood, the markets and most companies are still performing quite well. But we do have a few volatility catalysts remaining this week that we'll have to pay pay attention to. So in terms of today's video, we're going to do a few key things. Number one, we're going to be going over the technical analysis rundown of the SPY, the QQQ, and most of your major indexes. Check on the rotation or lack thereof today and see where we stand. What major levels should we be identifying to possibly line up some swing trades in the near-term future? Thereafter, we will do the same thing. We will go through our big tech list and derive some possible levels of interest for us. Special shout out though to this piece of news right here, which we will cover when we go through big tech, namely for Google. Google stock jumping 8% after the search giant avoids the worst case penalties in the antitrust case. Yes, the judge coming out with his ruling, and no, Google will not have to sell Google Chrome. No, Google will not have to divest its Android business, nor will it have to cancel its $20 billion deal with Apple. All things very good news and led to that stock being up in the after hours right now, 6.61%. So shout out to everybody who was buying the dip with me on Google all the way back here when it seemed as though every single day their search dominance was coming under question. We had allegations that they were going to have to divest all of their business and the stock would be split. Many such allegations, right? And none of them came true. And now we are sitting very pretty, Google at the all-time highs, and you guys must be up a lot of money right now. So congratulations. Being able to see through the narratives, being able to buy the fear, now we get to finally reap the benefits and all the rewards in the process. So we'll do a little bit of a deep dive of that article when we cover Google and when we do the big tech list rundown. And at the very end of the video, of course, we will take a look at our biggest gainers and losers of the day. There were many stocks to the downside and with big numbers, but also we had some names come into the green. So we'll be taking a look at some of these main names and deriving some price action levels of interest for some possible trades or some longer term positions. So without further ado, let's jump right into the video, shall we? Moving on to the S&P down about 0.74, the Qs down 0.84, and all across the board, you had a big sea of red. Take a look at the heat map right here. Most of big tech down, software down, financials down, healthcare not too bad. Healthcare is so undervalued right now and is somewhat of a defensive sector, especially when you have a risk-off move like we saw today. In terms of consumer defensives, not too bad all across the board, but still no major outperformance there. Industrials also down, only energy making it out a little bit alive. Taking a look at the one-day relative, you can see that even better. Only healthcare, energy, and defensives, not too bad. Shout out to basic materials, but I don't know if any of you guys trade that anyways. To the downside, though, major sell-offs, right? Real estate, technology, industrials, cyclicals, and financials all carrying the market lower, but technology, your biggest weight. So, of course, that had the most impact when a lot of your big tech names were down 1, 2, 3% in the morning. On the 1 week relative performance, we still stay very mixed, as we know the price action recently for the SPY has been a little bit choppy, especially coming out of the last Friday session, right? We had a good start to last week, ended it on a sour note, and now you kind of have the unwind. So we're kind of sitting at levels that we haven't seen in the past 2 weeks. And as a result, your weekly performance is somewhat choppy. Only energy, materials, healthcare, and financials able to keep it up. To the downside, sadly, utilities, real estate, technology, cyclicals, and industrials overall. On the 1 month relative, you still remain fairly healthy. Most major market segments are higher, but still we're starting to see a little bit of weakness here at the top of the market. And if you couple that with your notorious September seasonality, and also if you couple that with a lot of volatility catalysts that we have on the horizon, such as tomorrow, the JOLTS jobs openings, on Thursday, the private employment read, and then on Friday, your non-farm payrolls, you have enough volatility catalysts, meaning you have the gunpowder, you have the fuel for the fire, that if any of those reports are red, you can indeed unwind this daily uptrend. You can unwind the weeklies as well, and just go into a little bit of very healthy monthly consolidation, something that we were maybe anticipating for the month of August, but August was good. If you get it for September, they have kind of like a perfect lineup here to kind of take us down a little bit lower, especially leading into the September possible rate cut. I'll remind you the possibilities of a rate cut currently stand at 91.7%, which is actually up a little bit higher than where it was 1 day ago, 86% on the Friday session. Of course, these are trading days, so sorry, my head's in the way. It was 86 and it's now standing at about 92. So we will see what happens. There are some catalysts this week, such as those macro catalysts, especially the jobs, because we know jobs have been the core focus from most analysts recently. And we also have a couple big earnings, namely CRM on Wednesday after the close and Broadcom on Thursday after the close as well. We know that semiconductors pivoted from being your lead bulls, and now they're kind of leading the market to the downside. People not responding too well to the NVIDIA earnings, even though in my opinion, they had fantastic earnings, but word on the street, and also when you look at some of the message boards, Reddit, Twitter, stuff like that, the sentiment around NVIDIA is kind of shifting a little bit. It has been quite bearish since earnings. So unfortunately, a lot of the semiconductor industry has been moving notably lower and hasn't really done much in the past 1 month, right? As opposed to what it was doing for the past few months where it was rallying very, 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 very hard. We just haven't really been doing anything since the month of July. So that still remains one of your weaker sectors, although not forfeiting major levels. Still, one of your lead bears to the downside during this market consolidation. So moving into the SPY first in terms of our technicals, the SPY bulls are barely holding on for dear life. The line in the sand level still remains 634, and we came right down into it today, but did not break it. So as a result, we still are, technically speaking, in a daily uptrend. However, if your weakness persists over the course of this week with some of the jobs releases and you flush these lows, well, that will be the loss of the daily uptrend, which would be the first loss of the daily uptrend in roughly 3 months worth of time. So it would be notable to us if something like this does transpire. You might just be expecting the daily downtrend to continue into the later stages of September, maybe even all the way into the September 17th meeting with the Federal Reserve, which would just lead to some very healthy weekly consolidation. The weekly bulls have a lot of space, anything above 618, still looking for a weekly higher low. And even then, if the weeklies really fall off a cliff right here, what are we looking for on the highest time frames of them all? We covered the monthly candle closes in Saturday's video. You would just be looking for a very healthy monthly higher low, guys. It's been 4 or 5 months of beautiful rallies off the April lows. Something like this definitely would not look too awkward at all, in my opinion. And the fallback area would still be prior all-time high resistance, which is current support 615 down to 600. So get ready, get your shopping list ready, do some pre-market prep on the weekends. I'll be giving you guys the top 5 options plays for the upcoming weeks. And the best you can do is derive some levels of interest. And when the stocks come down into your levels, that's when you are actually ready to play ball. Moving into the QQQs right now, down about 0.84% today. And same concept. We almost lost the lows of about 2 Wednesdays ago at this point. 558, 559 is going to be the level of interest. Of course, many people pointing out this very clear head and shoulders pattern on the QQQs right now. In the event that you actually get the fall through and the collapse, you're looking for the daily downtrend continuation, which of course as well would be the first daily downtrend of its kind in the last roughly 3-4 months at this point. And thereafter, you would just be looking for a very normal weekly consolidation. The weekly higher lows are here, 552. If you lose 552 as well, well, you might just be going into a bit more extended consolidation. And the best time frame to take a look at that with is going to be the monthlies, right? Just looking for a casual monthly higher low into September seasonality, into the tariff narrative headlines, into some of the jobs reports, into the Federal Reserve interest rate cut, possibly cut meeting. And you might be coming back down here, 537 down to 513. That would not look so awkward. Previous all-time high resistance, current support, and the 12 EMA on the monthly as well. Something like this, and then a rally maybe into the end of the year would not look so awkward at all. If anything, if we're looking for the perfect period of time for them to do the extended consolidation on these charts, September would probably just be it. But keep in mind, I'm not trying to predict the market. I'm just trying to give the expected worst case scenario so that way you guys don't panic and you're possibly ready. Just understand who is in control of the higher time frames. It is indeed still your bulls. So we do still want to be dip buyers in the event that the narratives become really hot and you guys start paying too much attention to them. Just always remember who is in control of the longer term time frames, and you guys should be just fine. Moving into XLF financials right now. Financials taking a bit of a bath this morning, but still a nice daily uptrend right now. We kind of retested the prior highs, didn't close below them, but we are still looking for a natural higher low. At this point, anything above 52.31, looking for the new higher low for possible further trend continuation. In the event, that we unwind this, you guys know that they're going for a few things at the same time, maybe even a weekly higher low. The bulls are now in control of this weekly uptrend. A lot of space, still anything above 51, looking for a weekly higher low. You got tons of short-term EMA support, the weekly EMAs down here, and your prior resistance range will be current support for the markets. 52 down to about 51. So pay attention to some of your favorite names. One of the names that I'll be paying close attention to is Visa. If Visa comes back down 340, 330, I will want to add some shares to the long-term portfolio, but possibly also play some very attractive short puts. That's been a very solid trade for us because we know this area has been support for Visa bulls for what? The past 6, 7, 8 months. Fantastic level, and the 12 EMA on the monthly, something that the bulls rarely lose if challenged in the context of a bull market. Moving on to XLV Healthcare right now. Healthcare actually ending green on the day. The bulls looking for a bit of daily uptrend follow through. If there was a continuous motion of risk off sentiment, in the markets, you could expect healthcare to kind of pick up the slack, whereby your technology bulls are lacking a little bit. The line in the sand for them is 136 right down here. In the event that you lose this, sadly, it's a new daily downtrend. And of course, you would just be heading into a bit of weekly consolidation. Good level for the bulls right now, though. Beautiful support established in the past 3-4 months. And on the monthly time frame, which is the clearest time frame in my opinion, beautiful August candle close. We are maybe looking for the recapture of some levels to the upside right here into the 147 mark. Beautiful support as well from 2021. And currently still very close to this beautiful 50 EMA. How many times has it tested the 50 EMA, guys, in the last 10, 15 years? Only 3 to 4 times, and every time has been a good buying opportunity. So if there is some rotation in the markets away from tech, away from risk on, I would expect healthcare to be one of the bigger beneficiaries of that rotation, so to speak. Moving on to SMH right now, as we were kind of saying in the introduction, semiconductors really just haven't been doing anything since the month of July. And you know, they all had really, really good earnings. Micron had fantastic earnings, haven't done anything since the month of June. AMD had really good earnings, haven't done anything since the end of the month of July either. NVIDIA just had really good earnings, but even prior to earnings was getting a little bit stuck all the way up here. So semiconductors used to be some of your lead bulls, and now they're just kind of doing nothing, just consolidating sideways, which is a very natural thing to do, especially when you're up so much in a 3 to 4 month time span. Now the SMH is currently coming into its last line of defense here, 283 down to 277. Line in the sand level from 2 Wednesdays ago is not lost. If you do lose it though, into tomorrow or the rest of the week, you will lose support, you will lose the daily uptrend as well, and that'll just be some very healthy weekly consolidation at the same time. The lower level that you might be looking out for on the larger time frames is down back here to about 260. So in the event you get the infamous unwind here on the weekly time frame, don't be scared, just be prepared, right? You're looking for the monthly higher lows. A very normal area to pull back into would be that area I was highlighting, 260 down about 250, 12 EMA, beautiful prior resistance here, could be current support for the bulls. We're looking for a bit of consolidation, accumulate down here, and then go on for the next leg of the rally. I'm really looking forward to this if it does happen. I think it would be a fantastic area for some reloads on the longs. Moving on to the Russell right now. The Russell not doing too bad today, down only about 0.54%, but we know who is still in control of this chart. Of course, it is your bulls, benefiting from this nice daily uptrend, looking for a higher low and into support right now, 232 down to 225. So short-term price action still in bullish control. These are the highs of 2021, resistance here, and you're now backing down into them. So in the event you find a bit more consolidation, I'll remind you, it's been a very nice weekly uptrend from the April low. So we'd just be looking for a new weekly higher low, anything at this point above 212, looking for that higher low for possible further trend continuation. And if the Fed does cut interest rates in September and December, I do believe growth is a nice little X factor trade, because let's be honest, the Russell has not done anything in the past 3-4 years because interest rates, of course, has been very high. In the event that we continue having a bull market and we don't go into a recession, which is my base case scenario right now, we might just be looking for the extended expansion of the Russell. It's not going to do this absolutely vertical, but can we start to see some monthly uptrends form and carry us into 2026? Probably, which is why it's not a bad longer-term position trade, in my opinion, but just keep in mind, it will be quite volatile. If we move into some of our minor sectors right here, you'll notice that consumer defensives has largely been doing a whole lot of nothing, and they have been doing a whole lot of nothing since the month of April. Beautiful support right here, 80 down to roughly 79.5. Bulls currently holding their ground, so in the event that you guys are interested for some possible, recovery plays in some of your consumer defensive sectors, Colgate-Palmolive, not looking bad at all, coming into previous resistance, current support. I know it's a monthly downtrend right now, but accumulation and possible distribution is somewhat likely for this trade, in my opinion. UPS, lower 80s. This would be a price not seen since 2012. Fantastic dividend as well. That is another name that has been left behind a little bit. Some other people have pointed out Clorox. Clorox also coming into a range that they haven't tested since 2016, 2017, and thereafter in 2023. Not a bad name. And even names like Walmart, right? Walmart, you guys know we've been talking about it on the channel a lot. come back down here into the lower 90s, not a bad proposition. So there are some, position opportunities across consumer defensives if you guys are interested in playing them individually. However, if you were just interested in playing the ETF, the XLP overall, I would not blame you. At least you will not have company-specific risk, and you are just looking essentially for the expansion of this trade into the month of September, October. If we have some risk-off sentiment, I would not be surprised if XLP is also one of the bigger beneficiaries, as well as healthcare, such as we were describing earlier. Moving on to utilities right now. So utilities having a bit of consolidation move, but the weekly is very clear in my opinion. Looking for a new weekly higher low, anything above 79.90, looking for that higher low. Of course, you have a few things to kind of watch out for here. These are the prior highs, not only from back there, but also from this little key area that we had back in the month of May and June. So just looking for a back test. You pull back down into maybe the 82, 83. I know a lot of you guys are looking at some of the big energy players such as Duke Energy. Not bad, right? Not bad. These are a lot of the data center plays. So this one, some of you guys might be looking at Constellation. Some of you guys might be looking at GE Vernova on some pullbacks type of thing. Some of you guys might be looking at companies like Valero, et cetera, et cetera. Some of them are really consolidating nicely and possibly going on to their next moves higher. I know not all of these are utilities, but I'm kind of lumping up utilities and energy, the infamous data center energy requirement play that a lot of people are playing kind of as a narrative. Not too bad. So if you're looking for electricity companies in utilities, not too bad at all. Or if you just wanted to play the overall ETF, not a bad choice either. And now lastly, some real estate. So real estate kind of moving a little bit flat today, but we know that the price action is very clear on this one. Current support stays put at 41 down to roughly 39. Not a bad area to accumulate. And I do believe that this real estate ETF should be doing very well coming into rate cuts and coming into 2026 as well. There are many names in this real estate ETF overall. You can either play REITs such as Vici, which is the one that I own personally. Vici, I know some of you guys like Realty Income Corporation as well, but a lot of people are currently playing the home builders niche, which we started talking about all the way back here in the month of June, and that one has been doing really, really well for us. If we pull back right here on XHB, 110 and under, not a bad location for a bit of a reload trade. And if you're looking for some individual other stocks, you guys know me, I've been playing the heck out of Rocket Mortgage from down here all the way up. And if we pull back a little bit more, I'll be selling a bit of short puts down here into the 16 and thereafter $15 range and trying to accumulate some positions. So real estate, probably a favorable narrative here coming into the next 3, 6, 9 months worth of trade into the rate cut environment. Moving on to the VIX. The VIX actually popped up at one point today over 15%. Very strong move on the VIX, but was not able to keep it up all throughout the day. However, you might see a new resurgence of the VIX. We have a few volatility catalysts, as I described. Non-farm payrolls on Friday. You got the ADP employment change on Thursday, and the JOLTS jobs openings report tomorrow. If any of those jobs numbers come in weaker than expected, we know that that is the narrative that people are paying the closest attention to. So you might be able to see a rekindling of the VIX, maybe popping into the 20 zone. However, unless you get some real market calamity, the VIX is probably just going to be kind of a one and done pop maybe during the month of September. We're not really expecting it to come all the way back up to 30 such as it was during tariffs. And no, I am not playing the VIX expansion at all. The way that I play the VIX is when we get some very quick spikes, it's some fantastic opportunities to sell some puts way below the market on big volatile days, big red days, fantastic time to sell puts. And then when the volatility kind of dissipates, then you kind of look at what's left. What's left still at low levels for some possible leap call options. Moving on to yields right now. So yields were actually notably higher today. 0.78 on the 10 and on the 20-year yield as well, 0.78. So we know the rate cut odds have been increasing, but keep in mind, guys, right? You see that the 1-year yield is down. That is clearly because we have an uptick in the probabilities for a rate cut in September. But look at your longer term yields, right? Why are longer term yields up when rate cut probabilities are higher today? Well, longer term yields, guys, they do not really move so much with the overall direction of the Fed's short-term interest rate. They do, but at the same time, they don't. The longer term yields are all about risk premium. What are people looking to get as an interest rate for bonds before buying into them on a 10 or 20-year basis? Keep in mind, the institutions, the pension funds, the large sovereign wealth funds, and foreign governments, they're not buying TLT. They're buying the actual bonds. As a result, when there's tariff uncertainty and when the US is running a very large debt, right, in terms of government debt, and maybe it's going to have to repay some of the tariffs, Well, obviously that doesn't help the debt problem at all, right? So when that doesn't help the debt problem, it also puts a lot of pressure on the credit rating of the United States. Will they be able to serve that debt? And in the event that they can't or something happens, well, longer-term bondholders want a risk premium. So currently, as rates stay high, the 10 and the 20 years still haven't moved, and we will be looking for breaks here on the 20 down below 4.7 to really get us underway, and on the 10-year down below 4.2 to really get us underway as well. These longer-term yields are a bit more complex because there's more to it than just looking at the short-term interest rate, of course. And as a result, the bonds still remain very, very weak overall. Still a nice accumulation trade, in my opinion, unless you are of the opinion that the US won't be able to ever repay its debt and risk premiums on the 10 and 20 will stay sky high for the next 5 years, even though the 1 and 2 year yields will be brought down into the 3% range with Fed cuts. Well, if you do believe that, then maybe bonds are not for you. But for anybody else, because eventually these bonds will follow the path of interest rates, but it's just until the cuts happen, people can kind of play with these narratives, right? So I do believe bonds are a nice accumulation trade, just not doing much of anything right now. And lastly, moving on to gold breaking out in an extremely solid fashion. We noticed this starting to happen on the Friday session, and we were looking for a break above the last lines of defense right there, right? All of these prior candle closes. And now finally it did it. Yesterday, during the holiday, up almost 1%, and today up 1.64%. Phenomenal move on gold. Now you might just be looking for a bit of a back test. If we get the back test, phenomenal entry for some longs, in my opinion. 3450 down to about 3400 would be the pocket that I'd be looking for. We knew that gold had a bullish leaning bias because of this beautiful bull flag. The bulls were protecting this 12 EMA, and they were just looking for something, a spark of risk-off sentiment to really pile back into gold. Now you got it. Beautiful weekly uptrend expansion right now. And as a result, look at the MACD. The MACD also seems as though it wants to curl over. And on the monthly timeframes, even though we are super overbought, and we were saying it can break one of two ways. If we break to the downside, 100% you're going back there. If it breaks to the upside, you're probably looking for 35, 36, 37. As a result, instead of being trapped in this range and guessing, right, we were looking for a break either way. Break to the downside would have opened up to short, and now the break to the upside opens up some longs. So I'll be looking for a back test. If you don't get it, this one is just unfortunately gone at this point, but I will be casually looking for a back test, maybe 3450 to possibly position into another gold leg higher. Now moving into Bitcoin. Bitcoin actually didn't do too bad as well, guys, right? On the Monday session, the holiday yesterday, Bitcoin was up 1%, and today up about 1.8%. Still, however, trapped in the context of this daily downtrend, looking for the lower high, maybe for the revisit of the lows. However, if you get an engulfing move, come back up to about 113, the bulls have a chance to set this motion back to the upside. Now, that being said, guys, right, the clearest timeframes, in my opinion, is the weekly and the weekly and the monthly rather. Weekly downtrend into where? Into prior all-time high resistance areas makes complete logical sense, and we were wanting to play these dips, which I did. I've been accumulating some Bitcoin positions via MSTR, and I've also been selling the heck out of put options down here in this whole $107,000 to $100,000 range. So weekly downtrend, looking for some consolidation, which also means that you're just looking at the same time for a monthly higher low for possible further trend continuation. If Bitcoin stays muted with the rest of the markets for the duration of the month of September, that would not look so awkward. We're looking for a basing effect to happen here, September and October, for a possible nice end to the year in Q4, if the risk on trade does choose to continue. So Bitcoin, still a nice area to be accumulating. Still a nice area to be playing some short puts. Moving on to Ethereum right now. Ethereum not doing too much though. Ethereum still unfortunately in a bit of a daily downtrend. They tried to go for a bit more, but the bulls playing a bit of defense here at 4,300. The clearest time frame in my opinion remains the weekly time frame, whereby the bulls are just looking to take some off the top here, consolidate a little bit more. Maybe to the extent of a big sell-off, we can come down back to 4,000 to 3,700. You would just be looking for a very casual weekly higher low. So if we're looking for any positions in Ethereum or Ethereum related names, I would be looking for a backtest of Ethereum back here. That would not look so awkward. Even on the monthly, it would look pretty nice, right? Just a bit of a backtest here in September, maybe early October for some possible longs. And that is the trading style that I'm possibly looking for Ethereum. I still have some Ethereum longs. I opened a bunch back here. You guys must remember on the channel at this point. closed a decent portion of them at 4K, which was the big resistance range, and I'm kind of holding the rest. So if we get a retest, maybe I take some further Ethereum swing trade longs. If not, I'm just kind of holding what I still have. That's everything for your overall market rundown. Hopefully you guys enjoyed that. Now let's jump into some big tech names, shall we? So first things first, let's move into Apple as per usual. Apple down about 1% on the day, however, up almost 3% in the after hours, all the way up to about 236. Now we'll be noticing a few things on Apple, namely number one, the bulls remain in full control of the short-term timeframes. The most recent higher lows are probably now set with the lows of today, especially if we open up there tomorrow. So high, low, higher high, looking very good for a new daily uptrend. They kind of two-stepped it, right? We were trying to look for the one-time continuation. It was looking good into Friday. Today, a little bit of a mishap, and now we get the follow-through. The clearest time frame, in my opinion, remains the weekly right now. We were noticing that this was a very nice bull flag, right? Beautiful weekly uptrend, so to speak, and we're looking for a bit of consolidation into the infamous support range, 232 down about 216. I was saying that if we made our way back below 220, I'd be a big fan of accumulating further longs or selling some puts under the market. You guys know that we got some leap call options on the channel here and here, so we're up nicely on those, and tomorrow should be bringing us a bit more gains. We will see if Apple bulls are able to hold this breakout into the rest of the week. Could be nice for some weekly follow through. And even on the monthly, guys, the month of August closed in a very nice fashion for Apple. Apple still has a lot of catching up to do. Year-to-date performance, they're still down about 8. I mean, after today's post-market rally, we'll be down about 6 year-to-date. So still some nice catch up for Apple. We know they had a beautiful quarter of revenue, posting their best quarter since 2021. And we also know that coming up next week, we have the new Apple products to be released in the markets. That should be very good. And of course, now Apple retaining its deal with Google, still getting about $20–25 billion per year. So of course, the bulls are going to really appreciate that. Apple's still one of my favorite catch-up trades right now. It's not too late, but it is starting to get a little bit late. If you get a back test once again, possibly a nice area to be just building some longs down into here, which you may want to carry over the next 3, 6, 9 months if this is the type of trade that suits your profile. Moving on to AMD right now. AMD start off the morning very big red, but look what happened, guys. Literally in the first 15 minutes, look at the move by the bulls here. Almost filling the complete gap and now filling it back in the after hours. Phenomenal bounce from AMD early in the morning. This one was on the top 5 options list yesterday and was a phenomenal trade to start off the day today. You could have found some strikes exactly where we were looking for. 150 or better, the lower end of support. As of right now, we currently stand in a bit of a daily downtrend, so it's up to the bulls to play the best amount of defense that they can here. In the event that they just can't do it and get swept down a little bit, you guys know exactly where we're going. We highlighted it yesterday on the top 5 options list as well. Just looking for some very casual weekly higher lows, right? You just be looking for a retest of the lower end of support. 150 down about 135 is that range. Beautiful support for the bulls, and the clearest time frame for AMD is the weekly, but also the monthly time frame as well. You would just be looking for a very casual monthly higher low. So in the event that AMD has a poor showing in the month of September, it'll be a very nice reload area for some longs, because the long-term thesis, talking about the next 2-3 years for AMD, of course, stands very strong, right? In around the 160, 170 range, currently trading at a 1.46 peg, a 8.78 price to sales. And the forward growth profile for AMD is still one of my favorite across all of semiconductors. EPS will be a 2x on EPS over the next few years, and revenue as well. They will 2x their revenue profile in the next upcoming few years. Very strong growth numbers for AMD, which is why I truly believe that all dips are for accumulation for some longer term shares if you want. But even if we're looking to sell some put options, phenomenal to benefit from some of these days like today. You have big volatility, selling some put options at desired levels. If you are assigned, at least you know the fundamental thesis is indeed on your side. Moving on to Amazon right now. So Amazon taking a little bit of a pullback today, 1.6%. Amazon at one point this morning was down 3%, but they did cut those losses in half by the end of the day. Line in the sand still remains at 220.56. You break this guy right here, that's a daily downtrend, and you might just forfeit the area of support, which the bulls have been looking to defend, well, we broke through it through earnings, but really, for all intents and purposes, for the last couple of months, right? That being said, on the weekly timeframes, what are the bulls looking to do? Well, they're looking to maintain this nice weekly uptrend. The higher lows are set 212, the lows after earnings, just looking for a bit of a pullback. So if you have to do something like a tightening range or maybe like a two-step process of recovery, not too bad for Amazon. One thing's for sure though, this area and even a little bit lower, fantastic area to be building further shares in Amazon. Keep in mind, Amazon really hasn't pulled ahead of the market, right? It's kind of lagging behind the market, especially if you look at it on the last like 5 years time horizon. I don't know if it shows, 5-year performance on Amazon. Amazon's like the weakest big tech name in terms of 5-year performance. Amazon has a lot of catching up to do. It's still one of my favorite names in the entire market. The valuation right now around 220 is not too bad at all. So I'm still a big fan of building some longer term Amazon shares here and all the way through if we drop down to 210, where I'll be looking for this one to sell some short put options, possibly closer to 215, because at that point, you're just still looking for a bit of a monthly higher low. And I'd be a big fan of playing close to this monthly 12 EMA, right? Just a casual pullback for some possible expansion. I don't think Amazon has any problems in the medium-term horizon. Talking about end of the year, especially into 2026, I think they'll do quite well. Moving on to Google. Google, down about 0.72% today. At one point today, guys, Google was down 3%. The bulls did a really nice job of recapturing a lot of it throughout the day, and then came the infamous after-hours move. So let's take a look at the Google article, shall we? So Google stock jumps 8% after the search giant avoids the worst case penalties in the antitrust case. So here we go. A couple notable things in this article. Google will not be required to divest Chrome, nor will the court include a contingent divestiture of the Android operating system in the final judgment. Very strong news here. Plaintiffs overreached in seeking forced divestiture of these key assets, which Google did not use to effect any illegal restraints. That is exactly what I've been saying for the past 2, 3, 4 months. The divestiture of Chrome and Android, guys, was like the worst edge case scenario possible. In my mind, there was like less than a 2-3% probability of that happening. You would have to prove beyond a reasonable doubt that truly Google was impeding people to come in and compete with the space. But we know that that's not been the case. Look at ChatGPT, look at Anthropic, look at Perplexity, so many new players in the search game, which are kind of disrupting Google's business. So at the same time, I mean, you can't claim that Google's search business is being disrupted by all these new players, but then also claim that they have a monopoly whereby it's tough for new entrants to kind of pierce into the market. Let's continue here. In its decision Tuesday, Judge Mehta said that the company can make payments to preload products, but it cannot have exclusive contracts that conditions payments or licensing. Talking about their deal with Apple. Did they have to stop their deal with Apple? No. Google will not be barred from making payments or offering other consideration to distribution partners for preloading or placement of Google Search, Chrome, or its Gen AI products. Meaning that, Google can keep putting in bids. If it wants to be the partner for Apple, Apple can take whoever they want. They can partner with Microsoft to use their Bing and other search products, or they can use Google. So Google can still place some bids for that, but it just can't be exclusive, right? It cannot lock in an exclusivity agreement all on its own type of thing. That'll be up to the end companies to decide, such as Apple, yeah? Cutting off payments from Google almost certainly will impose substantial, in some cases crippling, downstream harms to distribution partners, related markets, and consumers, which counsels against a broad payment ban. So there you have it. Number one, no divestitures of Chrome and Android. Number two, they do not have to cancel their deal with Apple. Google was also ordered to loosen its hold on search data. And this was probably the prevailing consensus at this point, that Google was not going to be broken up. They're not going to have to cancel their deal with Apple, but maybe they have to share a bit more in terms of their search data with their competitors, right? To provide a more fair landscape, so to speak. During the remedies trial in May, the DOJ asked the judge to force Google to share the data it uses for generating search results, such as data about what users click on. The judge ruled Tuesday that Google will have to make available certain search index data and user interaction data, though not ads data. So Google's still able to protect its proprietary advertising algorithms. Google does not have to share or provide access to granular data with respect to advertisers. So, in my opinion, guys, this is the best case scenario for Google, really avoiding all of the biggest points that people were bearish about, and with good reason. This stock is right now up 6-7% in the after hours. Fantastic, fantastic, fantastic performance by Google, especially over the last 3-4 months. Google has proven to us a number of things. It's a very resilient company, guys, and Google is like an octopus. They have lines of business that do everything, right? They have search, they have advertising, they have Waymo, they have their whole AI projects as well. They have the Android ecosystem, they have YouTube, so many assets under this company, but people were focusing just on the main one, which was search and advertising. With good reason, though, that's their largest business. However, the fears down here, we kept on saying, are deeply overblown. And I mean, when a stock such as Google is trading at a 15, 18 forward price to earnings, guys, you kind of got to give it a chance, right? Even if it doesn't play out, you really got to take a chance on names like this. As it currently stands in the after hours, the stock is up to about almost 230 right now. And we've been commenting that this entire way up, the stock was still cheap, which is why this entire way I've been buying and accumulating for my long-term portfolios. And where we stand right now, if I were to redo the valuation, let's say we do it with a 225 forward price, let's have a look at the valuation right now. Is Google still a good deal at 225? Because I'm sure everybody's gonna be thinking, oh, I missed it. Google must be so expensive right now. They're looking at the chart, having some anchoring bias. Why would I buy Google here at 230 when I could have bought it at 165? Of course, very logical thoughts, but the forward price to earnings still remains one of the cheapest in the entire tech landscape. 23.38 forward price to earnings. And when you divide that by their EPS growth rate, it's trading at a 1.56 peg. That's still very, very good, very solid for Google. So if this is a multi-year investment thesis for you, I wouldn't get just, I wouldn't get dissuaded by the price right here. But if anything, you may just have to DCA into it, right? And that being said, daily uptrend for the bulls is currently still underway right now. Of course, we did not lose the lows today. Those would have been lost at about 206. So now daily uptrend is well underway. The stock's going to open probably here tomorrow. As a result, any pullbacks looking for a new higher low and any pullbacks on the weekly in the event that Google unwinds this entire move and gets brought down by the month of September, who is in control? Still going to be your weekly bulls, and you just be looking for a back test down here of where we just were. 207 down to 21 remains your previous all-time high resistance, previous all-time high level as well. Just looking for a very casual back test. The monthly charts paint the best picture for Google. Very strong move to the upside. So Google probably still going to be able to play a lot of catch up here over the next 3, 6, 9, 12 plus months type of thing. So of course, short-term time horizon, you missed it. But long-term time horizon for the next 5, 10 years, if you guys enjoy Google, still not a bad time to be DCAing. Moving on to Meta right now. So Meta today playing with fire, guys. Playing with the line in the sand level that we could not lose. We did clip below it though. Daily downtrend is underway on Meta, possibly coming all the way down to fill the earnings gap if the weakness does persist in the markets right now. Daily downtrend is just synonymous with weekly consolidation on this fantastic name. The bulls are still in control of this weekly uptrend for now, and the likely area where we pull back into if the damage continues, 710 down to 680, which is my area to DCA some shares, and as well a very beautiful area for a monthly breakout and retest trade. Targeting support, the 12 EMA on the monthly will be curling up. So very nice area, guys. If the Meta weakness continues, still a big fan of buying this name. And if we do pull back down there into the lower 700s or under 700, you just shave about 10% off this valuation. They'd be standing at a mid to high 20s forward multiple, which is great for this company that generates a ton of profits. Moving on to Microsoft right now. Microsoft weakness, 0.31% to the downside today. Daily downtrend still unfortunately underway, unwinding with a new lower low. So once again, the bulls are going to have to start everything from scratch. If you want to know when this weekly consolidation is finished, well, instead of guessing where it's going to end, such as the 12 EMA, we didn't really set any support on the way up. So at this point in time, you got to wait for the bulls to show you, right? And the only way that they can show you is by setting a new daily uptrend. So we need to see a completion of a daily uptrend. Only then will you know, yep, the weekly higher lows are probably found. And yes, we might just be on our way to leg number 2 on the weekly time frame. Weekly MACD looking a little bit dicey though. So downside consolidation can still be in effect. And on the monthly, we are very extended from our 12 EMA. If Microsoft weakness continues, the next area of interest for me will probably be down here 470 to about 460, retest of those monthly 12 EMAs and retest of the prior all-time high area. That'll be a beautiful breakout retest on Microsoft, and I'll be closely paying attention to it. If we don't get it, no problem. I have all the Microsoft shares that I could possibly want that I accumulated all of last year with you guys on the channel, because I know you guys, some of you guys sent me some emails. Very happy that you were able to buy Microsoft all of last year. But right now, though, the valuation around 500 is still a little bit on the rich side. So not my favorite play right now at the tops. Moving on to Netflix right now. Netflix holding on for dear life, man. They have been trying to protect this area for literally the past like 3 weeks, right? 1210 down to about 1185. So the bulls desperately trying to protect from the daily downtrend and the loss of support. We will see if they can get that done. We will need a break right now at this current stage. 1235. Give me a break of that. New daily uptrend is underway, and we might just be due for another weekly leg higher. But right now, it's pretty much anybody's game, right? Because if further market weakness continues, Netflix is probably going to take a little bit of a bath. And we know that in terms of the fib retracement size, it was only a 50% push by the bulls right there. Sorry, let me zoom in because I know sometimes these charts are small for you guys. So meaning, when you get a retracement size of 50%, it gives the bulls a 50% chance of resetting a new weekly uptrend, but it also gives the bears a 50% chance of breaking lower. So Netflix in kind of a, very tumultuous spot right now in terms of the price action. One thing's for sure though, in the event we unwind and continue this monthly slide, I'd be a big fan of buying more Netflix down here under $1,100, closer to the 12 EMA, an area that's no stranger to them, right? They do this very often in the context of a bull market. So that's the area that I'd really be looking for a bit more Netflix shares. Right now, above 1,200, it's still a little bit on the expensive side for some short-term action. And even for some long-term shares, a little bit rich, unless you have a 5-year time horizon. Moving on to NVIDIA. So NVIDIA, 1.95% to the downside. NVIDIA. Also toying with the last line of defense right here, talking about 171 down to 165. The sentiment since earnings, guys, has really not been the best. It all started on Friday with the Alibaba AI news. The earnings themselves were very good. We covered them on the channel, guys. And I mean, the quotes are very clear for NVIDIA, right? You don't need to ask me. We were very clear about that after the earnings last week. Everything is sold out. The H100s, H200s, people have to rent capacity now through companies like NBIS, CoreWeave, Iris Energy. The Rubin iteration coming out next year is going to translate to millions of GPUs per data center. But I mean, you can't really blame people, right? It's a $4 trillion company. People can't conceptualize that it can possibly be worth a bit more in the future. That being said, in around 170, the valuation still isn't that bad, right? It's still trading under a 2025 year-end forward price to earnings of around 39. If you use it on a forward price to earnings basis, like if you want to take 2026, their EPS is having another strong jump into next year as well. If you take 2026, right, which is 632, 170 by 632, trading at a 27 forward price to earnings. That's not too bad at all for 2026. So all things considered, NVIDIA isn't really that expensive all the way up here, but you can't blame people for having a bit of, negative sentiment after their earnings because they're used to being blown away by NVIDIA earnings. They still think it's 2023 and 2024 when the company is posting triple-digit revenue and EPS gains. Now, NVIDIA is only posting 50+% revenue gains for the next year, and people are a bit disappointed. And also, it's had a phenomenal rally. But that's okay for us because we know that we can see all through the short-term negativity and still understand that NVIDIA is a fantastic company. So that being said, in the event that the daily downtrend continues, we lose support and people start panicking, well, my viewers are going to know that if we are looking for some NVIDIA deals, we possibly want to look down here into the mid to low 150s, back tests of support. That would just look like a very casual monthly higher low, possible for a very nice end to the year and a fantastic 2026 for this company as well. So I will be continuing to target short puts down below into that range. You'd be surprised on days of big volatility like today, you can find some very interesting plays on NVIDIA. And I would also be accumulating some further positions if I wanted to, all the way down into that pocket, talking about shares that I'd be looking to hold for the next few years. Moving on to Tesla right now. Tesla down about 1.35%. The bull is really getting stopped out here at the resistance range, 360 down about 340. I mean, not the worst chart, but then again, this is a very large engulfing move. So it's going to take the bulls a while to kind of get their act together here and do another push. As of right now, we're really just trapped between two levels, guys. Overhead resistance, which I just said, and down below support, which is 300. In my opinion, the cleanest trading opportunity moving forward is if Tesla consolidates in the month of September and we get a little bit more of a monthly downswing. It's a monthly tightening range at the same time, right? I might be looking to play Tesla down here in the lower 300s, but I would not be interested in taking this one into a long right here. This was really the pattern. The initial back test, right, of this tightening range for expansion. It was a good swing trade. I know some of you guys did take this one at the lower levels into the highs. You are now out with profits. As of right now, no trade for me. Moving on to Palantir. Palantir up about 0.24%. Palantir was actually down about 2-3% to start off the morning, but the bulls, got to give it to them. They've been playing really good defense here around the lower 150 range. Now on the daily, it's very, very, very choppy, but two very clear areas right now for me at least. The high end of the range right now, 162, you break that, you get a new daily uptrend, and you put an end to this weekly consolidation and looking for a move higher. However, if you breach the line in the sand level, which is the lows of about 2 weeks ago at this point, sadly, it's the daily downtrend rollover, the loss of the short-term support, which is 150, down about 140, and you might just be looking for a bit more weekly consolidation. Good thing the bulls do have a lot of space right now, anything above 128, looking for a new higher low for possible further trend continuation. They're doing a good job protecting this 12 EMA, which they have done several times over the past year and a half. On the monthly, which is the clearest time frame, if you unwind more on Palantir and get everybody nervous because of the valuation, because of how extended the technicals are, everything's overbought, both fundamentally and technical-wise, well, what are you looking for here? Maybe a backtest close to the 12 EMA on the monthly. So if you come back down here, 130 to 120, that's probably where I do want to start playing Palantir a little bit more. As of right now, though, the bulls are playing really nice defense. Got to give it to them. So we'll take it, as we always do, one day at a time. Moving on to SOFI. SOFI backtesting its support range very nicely today. Daily downtrend underway. 24.5 down to about 22.5 is going to be this very nice support range. It was a very big area. It took the bulls a while to get through this one. And also, this is resistance from all the way back in 2021, so please keep that in mind. The weekly bulls are clearly in control of this chart right now. Higher lows, higher highs, and now maybe looking for some new higher lows. So I was very clear on the way that I wanted to play SOFI, and this one was also on the top 5 options list just yesterday. Today you could have found some fantastic short put opportunities in the lower 22s. The way that I want to play this one, guys, is yes, we can accumulate on these pullbacks here. We can accumulate some more shares and possibly go for some short puts under the market. The SOFI valuation right here obviously is not as good as it was back when we were buying 12, 13, 14, but still not that bad. Forward price to sales is currently at a 9, in contrast with other names like Robinhood, which are over at 20 right now. So relative to some of its sector peers, it's not that expensive, and even relative to itself, 9 for a fast-growing tech company, not that bad. 1.6 peg as well, not that bad. And I truly do believe that over the course of 2026, 2027, SOFI can really become the $40, $50 billion company that it says that it can, essentially. The guidance from the CEO largely warrants that as well. They have a compensation package at about $45 billion, I think. So that being said, SOFI not looking too bad at all for some further accumulation, but just play it slow, right? Because we know if the markets really unwind during the month of September, you can have a quick and sharp pullback, which is going to shake a lot of people out, but not you guys. I know you guys will probably be buying the dip on this one. Moving on to Uber. Uber down about 1% today, challenging the support range, 93.5 down to about 90.5. So right now, testing the line in the sand level, 91.58. Lose this, you lose the daily uptrend. Very choppy price action on Uber. You could argue that we're going for the good old breakout, retest of the range, and possibly run. And I could agree, but this one is just very, very, very choppy, right? The bulls not really able to complete the next weekly leg higher. Big leg, smaller leg, and now an equal leg right here. In the event we do consolidate further on Uber, the clearest time frame, in my opinion, is the monthly. You'd just be looking for a bit of a monthly rollover here. If I can find Uber again in the lower 80s, I'd be far more attracted to playing it down there for some short puts, but maybe also building some more position longs here. In around 90 bucks, the stock is currently valued pretty well, and if we drop another 10% from there, it'll look really good. Price to earnings drops under a 30, PEG ratio gets closer to a 1, free cash flow yield gets closer to about a 4.5%. Fantastic number. So if I can find Uber down here on some monthly, very casual and logical consolidation, that is where I will end up playing it. Not really looking to play some swing trade longs right here. That's just me personally. Moving on to TSM right now. TSM down 1.07%. They were down over 2.5 today, but they took back almost half of the losses. Not too bad. However, short-term bears Short-term bears are really trying to put in a bit of a downswing and continue this daily downtrend right now. You got one big level coming up very shortly. That is going to be 221. It's not the biggest level. It's not really a level at all, truly. I mean, it's just the highs from January and February. The cleanest timeframes, in my opinion, on TSM are the weekly and the monthly timeframes. You guys know that by now. Clear weekly uptrend right now, and you're just looking for a bit of a weekly higher low. The area that I want to play on TSM, because right now it's just been very choppy, right? Short-term bears are in control, but we know the long-term bulls are in control. So you have a bit of a mismatch on the timeframes. Weekly MACD is also curling over. In the event that you get more weakness through September, guys, I'm looking for the following area right here, 210 down to 200. Fantastic location for long-term shares. Also a fantastic area to be playing some short puts. Beautiful monthly 12 EMA, beautiful resistance, which is now going to be support, and a very casual look for the monthly higher lows for further expansion. TSM earnings were super good, guys. Extremely good. Super strong demand through 2026 as well. They just can't put out the products fast enough. Fantastic net margins. And if you drop me to a 210, take 10% off this valuation right here, you'd be trading at a low 20s forward price to earnings, a low PEG ratio as well. Those two things would make me a big buyer of TSM on any further weakness. So we will take this once again, 1 day and 1 week at a time. If they do pick us up, I'll be glad to add some of my positions down there, but just playing this one a bit slow for now. That is everything I had for you guys for the overall market rundown. Hopefully you enjoyed. Now let's spend about 10 minutes going through the biggest gainers and losers of the day. Okay, so starting off with the biggest loser, CoreWeave number 1, 9.41% to the downside. This one, guys, is going to have to be a long-term thesis for a lot of people looking to play this one. Very tough to derive whether or not we are at a short-term bottom. We are kind of out of price action support levels. The last one was around 100, and the bulls have been really struggling to maintain this area. We're actually below it right now. The next area, guys, the only one that we have on this chart is like 62, right? I'm not saying it's going down there. I'm just saying that's the closest one we have. If we put the fibs on this in terms of extensions, well, we're kind of at the 618 right now. They're defending the 618 with their lives. If you drop a level, well, casually, you're going right down to where I said. So as a result, CoreWeave right now is an accumulation trade or a volatility trade. I keep saying when CoreWeave has big red days like this, you can find some short puts well under the market with some pretty good distance. Also, if you're looking for some long-term shares and you believe in the thesis, here are the base and the bull case scenarios. If they just maintain a 5 or a 10 price to sales multiple through 2028, the thesis is very clear. Yes, they have some debt. We've talked about that in the past, but the revenue growth is extremely strong. They're backed by NVIDIA. They're backed by Jane Street as well. Has a lot of institutional interest, but of course, the narrative around CoreWeave right now has been a bit weak. So what I'm doing with this one, playing the volatility, short puts well under the market, but also accumulating some longer term positions that I will be holding over the next 1 to 2 years. Moving on to Circle. I can't speak today, my bad. Down about 9% overall. Coming to the last line of defense right here, 120 down about 105. So this area as well, you guys know that I've been accumulating some Circle shares slowly but surely. Made my first buys into here, into the 130s roughly after earnings, and I'll be buying a little bit more as we come down into here. Same thing as CoreWeave, right? Very difficult to say when this one's going to stop. We don't have that much in terms of long-term price action. The weekly bears are fully in control, unwinding the big earnings move, but we know that the bull and base case scenarios for this company through 2027 are very strong. If they just maintain roughly what the market is giving them, 10 to 15 price to sales, the price per share is very clear. This one, same concept as CoreWeave, either short puts decently under the market on big red days, or just accumulate some shares if you believe in the long term of Circle. Eventually, they'll start turning this one around. But the IPOs really have been hit hard recently, right? CoreWeave, Circle, Figma, bullish, all having a lot more bearish action than bullish in the last month and a half. On to Affirm right now. Affirm, we covered their earnings after they had them just last week. Affirm, fantastic company. We're just looking for a bit of a back test here, guys. In my opinion, Affirm becomes another good buying opportunity. In the event we unwind again, back down here into the 70s, I'll be playing more short puts under 70, and you're just looking for a very casual monthly higher low. I think this is probably going to be one of the best stocks over the next year and a half, 2 years, into rate cuts, into possibly the recovery of the consumer in terms of discretionary spending. They had phenomenal earnings. We covered them on the channel As a result, I will be a big fan of playing any medium duration pullbacks on this name. Figma's getting a bit interesting right now, guys. Really interesting, but they have earnings Wednesday. So I'll wait for their earnings. In the event I can find this one, I have a line here. 55 to 50 is the exact location that I'd be willing to play Figma. Why? Because if they come all the way down there, guys, that's exactly how much Adobe was willing to pay for them 2-3 years ago at this point in time. That is the area that I'll be looking out for. But as we can see, Bears clearly in control of all time frames, daily downtrend, weekly. I mean, there's no trend here. It's just been straight down since the IPO, right? In the event that we start breaking down into the 50s, I might be looking to start a position on Figma just based off of valuation alone. Sentinel-1, we covered their earnings last week as well, down about 6.15% today. If we retest the lower bound of support, I really enjoyed their earnings. They had pretty good earnings. If we come back down here, again, I will be playing short puts and also not a bad location to be building some leap call option positions. I'll be playing this one a little bit slowly. I'm a big fan of playing the back tests now that we do have their earnings. So down there around the 17 into 17 down to 15 location, not bad. We did their valuation at about 19 after earnings, and it's actually one of the cheapest semiconductor players out there. If we give them a base and bull case scenario of either 8 or 10 price to sales into 2026, it would give them a normalized share price of possibly in the upsides of the $30 range. Not looking too bad. The risk to reward on this one is fairly attractive. Now we'll do a bit more that I'll kind of like pick and choose here. So MP Materials still a little bit too hot for me, still a little bit too high for me right now. That being said, if I'm not playing MP Materials, I might just want to play some of the pullbacks on the other names, such as USAR. USAR pullback here, 13, 12, 11. Not a bad location to be accumulating some positions, such as longer duration call options if you're going for the narrative, and even a stock like quadruple U's, right? U. If we do come back here a little bit more, I'll be accumulating a couple more shares or maybe some out of the money call options for 2027. We're just looking for one of these names to benefit from the next Department of Defense contract or the next bit of government subsidies for the infamous critical minerals niche. I think it's going to be a good niche trade, at least over the next 6 to 9 months, as the US seeks to reduce its reliance on foreign critical minerals. Very normal, right? Equifax, in my opinion, guys, possibly right now in the market, one of the more interesting buys, right? Down here, 240 to 230, not a bad area for some accumulation. 200 weekly EMA and fantastic support. Previous resistance from back here in 2023, support from 2024, coming back into it as well. And the valuation of Equifax up here is really not that bad. Very strong company, decent net margins, decent revenue and EPS expansion. This one will do well with the amount of credit that will be ran in the forthcoming next years, right? In terms of the financing that'll be available to consumers when rates come down. Look at the EPS ramp coming. That's not something they had, guys, over the past 4 or 5 years. And the revenue ramp as well, very decent. This one and FICO remain some of my favorite kind of under the radar plays into 2026, 2027 with those macro tailwinds. A couple more that we can do that are notable of interest to me. So Nike, we've been talking about this one for a while. Nike revisiting the lower 70s. This one for me is a buy. We've pretty much unwound some of the bullishness that we've had over the past few months. And if Nike comes back down into the lower 70s, decent retest, a lower bound of support right here. And the valuation is not too bad either. So if we're looking for like leap call options on Nike, 2027, of course, not like January, right, of 2026. 2027 or some recapture value for some shares to the upside for the eventual recovery of this company, which I think is a sure thing, but might just take a bit longer than people are anticipating, right? Not a bad location for Nike, so I'd be fairly interested in that one. And lastly, Mercado Libre, a few more here. Mercado Libre, fantastic buying opportunity here, 22 all the way down to 2100 if we find more sell-offs over the month of, September and October. We covered their earnings just about a month ago at this point. Fantastic company right here, guys. 2xing their revenue and EPS over the next few years. Phenomenal company. And the valuation right now is really good. 1.34 peg and also a very cheap forward price to sales. Look at the expansion that Mercado Libre is currently going to have over the next few years. Beautiful EPS ramp right here and beautiful revenue ramp as well. So I do want to be benefiting from this weakness. I'm not playing options, but I am definitely accumulating a lot of shares. And lastly, we're going to cover Rocket Mortgage. So Rocket Mortgage, not too bad. If I find more of a pullback here into the 16 to 15 range, selling put options, guys, I'm going to stagger them. Some in the 16s, some in the 15s, and look to get my positions back. If we come back all the way to the 15s, I'll be loading up on leap call options again. You might remember I had some that I bought back here, sold a couple there, sold the last batch at the actual highs. I'll be looking for a reload territory for those leap call options, possibly down there. And that's kind of all the ones that I really wanted to cover for you guys. I mean, I guess I could do Robinhood because everybody's curious, right? Robinhood just really needs to respect this level right here, right? $100 psychological. It is a daily downtrend right now on Robinhood. If they lose that, they run the risk of also losing the weekly uptrend. You guys know the drill, crossing the MACD. You had some bearish divergence, highs there, highs on the RSI, diverging from themselves, of course. In the event that we do consolidate more, I mean, the valuation is very expensive right now. You would not be surprised. You are looking for monthly consolidation. Wouldn't be the worst thing for Robinhood. Maybe I might get interested if we drop back down to like 80, 70, but not really all the way up here. It's a bit too expensive for me, and we did have a bit of a loss of the momentum. I think there's just better trades in the market. The problem with names like Robinhood is that people buy them up here expecting the same amount of velocity and momentum that we had back there. It's just not going to happen, right? Robinhood like 4x'd in 4 months. It will not 3-4x again in the next 4 months. The market cap is just a bit too high for it to do that right now. But if we get some meaningful pullbacks, I'm probably going to be willing to play those. You just got to give it some time, right? That's everything for your consolidation. Now, if you look at some of the names that were to the upside, Open Door, this one still is the same thesis for me. Yes, you can go for some shares. Yes, you can go for some leap call options, but it's going to be very wild and very volatile. It should just be an accumulation trade for you. Set a dollar amount that you're willing to put into this stock, and that is it, right? Just risk whatever you're willing to lose. The thesis makes a bit of sense. It has the macro tailwinds of the rate cuts, of course. So can we possibly see an uptick of Open Door back all the way up here, $10, $11? Yes, you can. Can we also see it just do absolutely nothing and flush everybody out, $2, $3? Of course you can. So buy whatever you're willing to lose on Open Door and just kind of ride it into the top end of the thesis. But as soon as you're up like 2x on some of your options, you guys probably should be making that trade free by cutting about 50%, excuse me. Iris Energy, IRN, very strong name, of course, very strong performance today, lifted, of course, by the gains in Bitcoin, and just really not being left behind at all today. We covered their earnings on the Saturday video. Not too bad. Forward price to earnings of 24 and a relatively cheap price to sales. IRN for me would be a buy on the event in the event that we get any meaningful pullback, but I probably will not be chasing it all the way up here. If you do get a nice pullback though, call it back under the 25, 23, 24, 22 level. So low 20s, I'd be a big fan of possibly playing some pullbacks, maybe selling some put options down here. And I mean, don't say that it can pull back. They can all pull back. You guys have seen this happen with Iris Energy a few times, right? Where we pull back hard. NBIS is the same concept. They can indeed pull back. If you're just patient for your levels, fine. If they don't come back and pick you up, no problem, guys. There's so many stocks to trade in this market. You should not get married to one single position or have FOMO for one single position. Oh, Ulta Beauty, 8% rally. They got flushed after their earnings on Friday and now back higher. No trades for me on Ulta Beauty right now. It's kind of far away from any meaningful levels that I do want to play. And we're kind of coming into the top end of resistance right here. So I'm not really looking to play it at all. The play that I'm looking for in the whole beauty segment, you guys know me by now, is Elf Beauty, looking for the recapture to the upside right here. Elf Beauty is a longer term hold for me, possibly for the next 1 to 2 years, as I'm looking for the expansion of the business overall. It's a very cheap stock as well. It's only $7 billion. And I am looking for the monthly expansion trade in the event ELF pulls back down here into the lower 100s, selling some put options, maybe buying a few more shares. That is my favorite beauty company in the markets right now. A couple more and then we're done here, guys, right? Can't go through these forever. SMR, still very choppy price action. The bulls are trying to get a daily uptrend going again, but we know that we lost kind of all the momentum here on the higher time frame, such as the weekly. You really lost the weekly higher lows. So that is also synonymous with monthly consolidation. And SMR, I don't mind playing it down here, guys. Selling put options, lower 30s is probably going to be my best bet for this stock, as it doesn't really have much in terms of the ways of revenue into the near-term future, right? But it is a thematic play, and I don't blame you guys for playing it a little bit. But I think that's pretty much it, though, guys. It's really pretty much it. We covered most of all these names. So in the future, that there's more new names that enter this list tomorrow. I mean, we do a good job, right? I covered so many of them last week as well. We went from value stocks to growth stocks and everything in between. So you guys probably have a good idea of my thoughts on many names in the market. And since the price action doesn't change so much on a day-to-day basis, whenever you hear me talk about different names, such as like, let's say Louis Vuitton, we talked about it last week, right? I won't bring it up every single video. I'll say it once on the higher time frames that this is a good buy, and you guys should understand, right? SMR, I've been saying it for a couple weeks now. Lower 30s is where I want to buy it. So just pay attention to that in terms of if you want to know where I'm kind of looking to play these stocks, either buys for long-term holds or short-term swings for either options or short puts, and you should be just fine. But that's everything I had for you guys today. If you enjoyed, consider dropping a like. Would really appreciate it for the growth of the channel. Over 8,500 subscribers at this point. Thank you so much to all of you guys for following the channel, watching the videos, commenting, like it. You make the journey all worthwhile. So if you're interested in seeing more of these videos, please subscribe to the channel. And last but not least, if you have any questions, please feel free to leave them down below. I'm always willing to help you guys out in the best that I can in the comment section if you have any questions. And last but not least, if you wanted to join a community of like-minded traders and investors such as yourself with over 200 other members, we have a lot of fun in there every day. We trade the markets every day. And in the Discord, of course, you get access to all of my trades, whether those are the wheel trades, the call option trades, and everything in between. Here are just a lot of our trades. The green little check marks are wins. The red little circles are losses. Here's just a lot of our trades on a weekly recap basis over the course of the past few months. You get access to every single one of them when I do them. You also get access to our private morning live streams every morning, Monday to Friday, where I stream live, trade the markets live, and also take all your questions on your stocks, your options, and your long-term portfolios. So if ever you wanted to ask me questions directly every single day on some of your favorite holdings, that is the best place to do it. If you can't be there, you can ask me those same questions in our chat rooms all throughout the day, and I'm always very fast to answer you guys. You also get access to our private education section where I go through how to do technical analysis, fundamental analysis, different swing trading strategies with options, whether those are leaps, call debit spreads, put credit spreads, all the various things, right, in terms of education that I use for either long-term portfolio investing or swing trading with options and everything else. All of those videos are in there. Our members really love that section. They learn a lot there. And last but not least, you get access to all of my watch lists. You can literally just copy paste all of my watch lists. It comes with also all of my charts. It comes with all the support resistance levels that I ever draw on the charts and all of the earnings breakdowns that I do as well. So it's just an easy way for you to just copy everything that I have. It takes about 10 seconds. If you guys are interested in any of that, the link to the Discord is down below. I still have the 30% off coupon code for Labor Day. That one will be active until midnight tomorrow, Wednesday, essentially. Well, tomorrow night, right? Wednesday at midnight, it pretty much stops. So you would get 30% off your first month in the event that you wanted to try it out, join the community, and possibly make a lot of friends along the way. So that's everything I had for you guys today. Link down below is in the Discord, the description of the video for the Discord, of course. That's everything I had for you guys today. Have a beautiful rest of your evening, and I'll see you guys tomorrow after the close. Take care, best of luck in your trades, and peace.